I've just done a survey of over 1,000 Kiwi investors to find out why people like you invest. And the number one thing that people like you want is financial freedom. So I want to have a bit of a heart-to-heart with you about how you get financially free, because that's what my book Wealth Plan is really about. And just in case you're new to the channel, I'm Ed, I'm an economist and property investor. And while I wouldn't consider myself financially free just yet, I've recorded over 1,700 podcasts about how to become financially free. I've written a book and I speak in front of audiences around the country. And for a 31-year-old, I'm well on my way. So let's have that honest conversation about how you can become financially free. This is Property Now. Now, financial freedom, it can be a bit of an airy-fairy concept, because how much money do you actually need to become financially free? And if I asked you to close your eyes and envision your perfect day where you are financially free, what would you think about? Well, it might be not having to go to work or choosing when and where you work. But I guarantee that my perfect day of financial freedom will be different to yours. But I'm also an economist, so naturally I think that numbers are important. So the main thing you need to figure out is your freedom number. That's how much passive income or money you'd need to spend each year to feel financially free and get whatever you just thought about when I asked you what financial freedom looked like for you. And that's money that you get, that's money that you can spend without working. It's not money you have to earn, it's money you can spend without getting out of bed in the morning. That is your freedom number. And there are a couple of ways to figure this out. You can use this calculator, which I built to figure out the cost of your current lifestyle. You can read this article where I talk about the cost of different lifestyles. But here at Opes Partners, my team of financial advisors work with literally hundreds of investors each week, and the main number that people choose as their freedom number is $100,000 spending money per year for a couple. And it's probably just because it's a big round number and it sounds about right for most people. Once you've got your freedom number, you need to ask yourself, well, how am I going to create this income? So if you want to have $100,000 a year to spend without working, how do you actually get that? Well, you need assets like shares or property. They can earn you an income, so you get that income without working. That's called passive income. Or maybe you've got a share portfolio or a portfolio of managed funds, and you can sell some of that to pay for whatever you want to spend money on once you're financially free to hit your freedom number. Those assets can actually be anything: shares, investment properties, cash, anything but your family home, because you can't eat your house. But how many assets do you need? Here's a simple way to think about it. If you want to have $100,000 of spending money per year, it means you need around $2.5 million worth of assets. And that's because of the rule of 4%. And it's a really simple rule that says if you've got $1 million of assets, whether it be shares, a house, cash, you can spend around $40,000 per year. And I like this rule because it's so simple. You take your spending goal, you multiply it by 25, and you get your wealth goal. But then you've got to ask yourself, well, how am I going to create $2.5 million worth of assets? Because that is a lot of money. I mean, I've got the goal of where I want to go, but how do I actually get there? And that's what we're about to dive into. But if you like learning about property and finance in this honest, numbers-focused way, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. And if you do already subscribe, you know I've built you a calculator to figure this all out. Even if you don't think you currently have a plan, you do have a plan, because no plan is a type of plan. And for a lot of Kiwis, they are investing already. It might be your KiwiSaver, or maybe you already own an investment property. Even if you're just relying on the pension, New Zealand superannuation, that is a type of plan. And the honest truth is that for most Kiwis, over time, you will build some wealth. So you've got this goal, you want to build some assets, you want to spend some money so you can get your freedom number, but you need to see if you're currently on track for that wealth goal. But all of these things are really hard to calculate. If you just think about your KiwiSaver, over the next 10 years, you're probably going to keep investing. On top of that, you're probably going to get some pay rises. So how do you factor all of that in to figure out what your KiwiSaver is going to be worth in 10, 15, 20 years? It's really hard to know. And so I created my wealth plan, which is a piece of software to help you crunch these numbers. So this is someone who wants to spend $100,000 a year and they want to be financially free in 20 years. And their KiwiSaver is doing a little bit, 60 grand today. They're currently investing. They've got to keep doing that. Their investment property is doing a lot. And then we've got New Zealand superannuation, the pension, which comes in right at the end. So now they've got their freedom number, 100 grand a year. We've got their wealth goal, $2.5 million of assets. And we can see if they're on track. And the honest truth is they're not currently on track. So they have what we call a wealth gap. This is the amount of assets that this person would need to create to achieve their goal. And it's currently just under $1 million worth of assets that they need to go out and get. It's a lot of money. But just before we talk about that, what happens if they don't fill their wealth gap? If in 20 years they just keep doing what they're doing? Well, they're not going to be able to hit that freedom number. They're not going to feel financially free because they don't have the 100K passive income, 100K spending money that they want. And if this was you, you'd then have a choice. You could either change the goal or you can change the plan. So one option would be to say, well, I don't want to actually invest any more money. I'm happy living more humbly later on, so I don't actually want to invest any more today. That's one legitimate option. But if you said, on the other hand, no, I don't want to change my goal, I now need to change what I'm currently doing. And this is where it gets really interesting. I was recently on News Talk ZB speaking with Jack Tane, and we were talking about his retirement. And he said to me, well, Ed, if I've got a wealth gap, maybe the message is to save more. And I was like, no, Jack, that's not the message, because in this case, you'd have to be saving about $48,000 a year to make that $1 million. And there are not many people who are actually doing that. And I know what you might be thinking. Ed's going to tell me that I have to invest in property because this is a property investment YouTube. Well, no, that's not necessarily the message, because you can create wealth through shares. You can create wealth by building a business, and you can create wealth by investing in managed funds. But a lot of you here are property investors or are interested in learning about property, so let's explore that as an option. The main reason I invest in property is that you can get a return on other people's money. So I just released this video about how I bought a property with $0 in cash. And just to tell you what's in that video, I wanted to buy another investment property. The bank would lend me some of the money to buy it, but not all of the money I needed. So I needed to come up with a deposit, but I didn't have the cash for it. But I did own another property. And so I borrowed the deposit against that property, and I went and I bought my new investment property with $0 of my own cash. Now, here's where it gets interesting. As that property goes up in value, I get to keep all of that money. I get to keep all of the capital gains. And that's how you can get a return on other people's money. Now, it's not all magically free money, because at today's interest rates, the rent doesn't cover all of the costs. You need to top up that property, and that's the trade-off when you invest with a lot of other people's money. But if you think about the return, let's say that you borrow all of the money to buy $1 million property, and then if it goes up by 5%, you've made $50,000. Now, of course, I'm not telling you all to go out and buy $1 million properties. That would be really stupid. This isn't formal, personalized financial advice. This is just a YouTube channel. But it shows you why a lot of Kiwis decide to invest in property. Because coming back to this example, 2 investment properties bought over the next 5 years would get this investor on track for financial freedom and hitting the freedom number just over $100,000 a year, which they're after. And if you want to learn more about property, make sure you hit subscribe, because that's what this channel is about. But I want to be really clear. The message of this video is not that you should only invest in property. It's that if you want to be financially free, you need a plan. So before you even start investing, you need to know your freedom number. What passive income, what spending money do you want? What income or spending money would make you feel financially free? Then turn that into an asset goal. Then see how you're progressing towards that goal. Then see if you're going to hit that goal anyway, even if you don't invest any more money. And then you can decide if you need to invest more money, what are you going to do about it? And what would be the least risky, most achievable way to make that happen? And the answer might not be property, it could be something else. But you need to go through this really nerdy number crunching process so you can figure out what you personally need to do. And that's the advice I would give to someone who wants to become financially free. And if you want to figure out these numbers and crunch them, the easiest way to do it is to talk to a financial advisor and use the software. You can book a meeting for free on our website, opespartners.co.nz. We help regular Kiwis grow their wealth through new build investment properties.